Good afternoon, folks. Joe Baker with Trade Pilot. I want to talk about last night's video I made explaining that we would most likely have an inside day and then let the market dictate to us what it wants to do. Okay, we've had our inside day. Is it going to dictate to us what it wants to do? Absolutely. How will we know that? We use Andrew's pitchforks. They're auto forks. They populate by themselves. We do not draw these to what configuration we want. They're auto-populated. So what we're looking for is a 1256 close below would put us in this downtrend channel. Okay. If we stay above the 1256, we will stay in this up channel and work our way back up. Now, could we start a new pattern? Yes. This could be the A portion, this could be the B portion, and this could be the C portion, and then we could head up, and we would negate this entire move over here, this whole Fibonacci cycle. That's how they work, guys. You just have to understand, cycles end and another one begins. I was not looking to take out the 1292.50. We did not take out the 1292.50. Now we're looking to stay above 1256 in the S&P futures. We need to close below 1256 to get back in this downtrend channel. That would probably most likely bring us down to the 1240, 1225, 1218, 1212, 1200. Know those big numbers, guys. Know those big numbers. They are big numbers. You got to pay attention to them. They mean something to the bigger traders. If they mean something to the bigger traders, they should mean something to you. So that being said, we are looking for strength or at least a bounce or something around the 1256 area, because that puts this market back in this downtrend. And if that happens, then we'll just revisit it then. I can only just go by day. I don't like to predict too far out. I can give you big numbers. I can give you 1256, I can give you 1240, 1225, 1218, and down at the 1212, which is the target on this move, and then ultimately the 1200. Those are all the big numbers laying underneath us. Those are going to be areas of support, lines of defense where the market should hold. Now, if they break them, they most likely go down to the next level. That's exactly how we trade them intraday, but on a smaller time frame. That's how we capitalize on that. So, that being said, I just want to make you guys aware of how these numbers work. The larger players, the ones with the money, the ones that are actually moving this market, they're watching those numbers. They want to make sure those numbers hold. They want to test those numbers. They want to make sure that there's a proper floor before they commit any capital for any time frame. So it's just like you would. I mean, you want to make something prove itself before you commit yourself to it. So that's why we look at the numbers per se and the areas of lines of support and resistance every day. So as opposed to just coming out and just screaming it's the bottom's in because Kramer said so, and that we're just straight up from here, and then we have a 200-point move slapped in your face literally the next day. What a meathead he must feel like. But that doesn't mean that we can't go higher from here. It's just saying let's look at what's real. Let's look at what the market's telling us, because the market will always tell us. It'll always leave a calling card. It'll always leave a trail on what it wants to do. So again, guys, right now what I'm looking for is we would take out the upside break. Okay, the big number to the upside here is 1292.50. Okay, the big number. Now, downside break 1256. So we're in a range now between 1292 and 1256. We take out 1256, we start a whole new down range, and that 1256 probably most likely down to the 1218 level, and that's our new trading channel. All right, just want to explain kind of what we do in the room and how we kind of look at things on a macro basis, as opposed to our little intraday trades that we try to profit on every day. All right, that being said, guys, again, I'll mention it one more time if I haven't said it enough. 1256 is the level that puts us back in the downtrend. And let's go over to the daily pivots. And here we are. Okay, line in the sand, 1266.50. A move above 1266.50, I'm looking for higher levels. So what have we got above 1266.50? We got 1268.25 staring us right in the nose. So be careful on this breakout here, and we've got this pivot right above it, only a couple points above us. Then we've got a breakout at 1272.50 with a small pivot at 1274.75, one at 1280.50, and then our ultimate target would be 1284.25 with an extension of 1286.50. Now to the downside, underneath the 1266.50, we're looking for 1262.50. 1260 is our breakdown area. Breakdown is 1260. I didn't have enough area to write that, but I'm going to repeat it. Breakdown area is 1260. We have 1258 staring at, and then we've got 1251.50. 1248.25 is our target. That's right here. 1248.25, guys, is our target. And then a extended break, 1245.25, and then that 1239.75 area, 1240 area to the downside. If we get any downside action, these will be the areas where the market will tend to bounce. If we get any upside action, these will be the areas where the market will tend to have resistance and pull back, most likely to its lower level resistance. So that's how we trade these intraday. These are our big numbers. These are our levels. And then as the day goes on, we actually develop dynamic levels that happen within the trading day. Again, you guys are more than welcome to come in to our trading room, check us out, see what we're all about, see the indicators we use. We use so many different ones, it's hard to explain, but I will start doing some videos and taking some screenshots of things that we've done during the day so you can get an idea of how we trade these markets intraday. They're not that difficult to trade. You just have to know what to use and when to use it. You know, it's like anything else. If you have the right tools for the job, it makes the job a little bit easier. What we have is not magic. It's not some magic formula we cooked up in a lab and came out, and you know it's something that's been around. One of the tools is the pitchforks. It's been around since the 30s, guys. Okay, I mean, you know, been around for an awful long time. They're not new by any means, and but they work well. They give us an overall market direction. They give us a channel. We always try to sell the upper levels and buy the lower levels. It's not rocket science. But you guys can come in. We do have a lot of proprietary indicators that we have developed. Some that are very interesting, I think you might find. So just drop me a line, send me an email, and I'll get you a password for the week. And you come in and just check it out, just out of interest. All right, guys, I will talk to you later, and I'll be doing more analysis tomorrow as this market leans on. Actually, tomorrow's Friday, so I'll be doing it over the weekend, and we'll see where it leads us. But very interesting market. Got a lot of movement, kind of like a roller coaster, but it can be a lot of fun if you're on the right side. Take care, guys, and I'll see you next week.